Gold has closed above $2,000 per ounce for 14 straight weeks. What does that mean for silver? And we have some big news about silver as well. But let's dig into this crazy price action that we've had in gold. Our friend Vince Lanci pointed out on an interesting short article that gold closes its 14th straight week above $2,000. Gold ended the week with its best day in February, up 6 of the last 7 days. Guys, gold is performing super strong, and don't worry, one more time, I think this will become a permanent fixture. Remember, the gold price pulls along the silver price. We'll talk more about that later, but this strong gold price should give silver investors and gold investors something to be very happy about. Other interesting points. Orderly. It was a very orderly. Have you noticed that? Gold has just been very steady Eddie. Not a lot of volatility. Now, let's not be shocked if we don't have a Sunday night slapdown. We don't want it to happen. But look, we want to be prepared for the worst case scenario. Occasionally, throughout history, on Sunday nights, we've seen things like gold get pummeled by 50, 60, one time even $100 per ounce. So let's be mentally prepared. Again, we don't want that to happen. We don't think that's going to happen. I'm not predicting it's going to happen on Sunday night, but we've had very steady upward movement in the gold price. And it gets even more interesting. Here's a chart show you a quick picture from Vince Lanci. The box there shows 14 straight weeks of gold closing above $2,000. This is big news on many levels because we're going to talk about a couple of reasons why, and I think maybe we're going to start hearing more about gold and silver in the mainstream media. Vince says, this market is being accumulated again. No doubt about it. People are buying gold. Bids underneath are keeping a floor under the precious metals prices. And shorts are being forced to cover more frequently. Yes, those naked shorts, those people that on the COMEX and the LBMA just sell all the paper, make believe silver. They can sell whatever they want, right? Well, they're being forced to cover their shorts, which we feel really bad for them, don't we? Those downward price manipulators. We can also confirm our previous reporting and the long macro players who bought on December 3rd and for days afterwards have expressed their opinions by now also buying options. Now, why is this a big deal that we have this gold price above $2,000? Okay, let's just look quickly. Where did it go? Here it is. I drew a new chart. We had a cup and handle chart for silver. Guys, the most powerful chart pattern in the history of the universe is this, the cup and handle. And this is fresh off the presses. I drew it this morning, a cup and handle chart for gold. Now, a couple of very interesting things about this. Number one, it starts back in 2011 when we got up close to 2,000 in gold. We got down around, 1,200, 1,000, somewhere in that range. In 2020, we went back up. That's the cup, okay? Now, if we go 4 years out in the future, that's what we have now. That's the handle, okay? This is the most powerful chart pattern in the history of the universe. A lot of the technical people will say a cup and handle pattern is the most reliable, most predictable pattern that's out there. But what's even more critical to think about on this is the longer the period of time that the cup and handle develops, the more reliable and predictable that it becomes. And this is where we are. See, Smiley? See? That's me. Can you smile? I dare you. Who can smile? You know what? I need to smile, darn it. I keep forgetting to smile. Type smile in the chat if you're going to smile for me right now. All right, there we go. Did I do it? Yep, I did it. Because that's where we are right now, guys. $2,000. We are above $2,000. Now, from a cup and handle perspective, that's big. But also from the perspective that gold had tried to close above $2,000 several times, like 3 times, okay? Couldn't do it. November of last year was the first time that gold on a monthly basis closed above $2,000, and we've stayed above $2,000, and we've got this cup and handle pattern. I'm telling you, the future looks bright. And don't forget, this is going to be a normal prop here in the basement, so bear with me. This is the gold price. I even put the guy's name on there, Francis Hunt. That's who I got this idea from. The gold price pulls the silver price behind it, right? And when, like we have now, this bungee cord is the silver to gold ratio, when it gets extended, all that energy, when it gets released, boom, okay? I promise I'll only do that once a week from now on. But I think that's a critical way to understand what's going on between the gold and silver price. The silver to gold ratio, gold to silver ratio, whatever they want to call it. We call it silver to gold ratio here in the basement because we can do as we please. This high silver to gold ratio, mid 80s, 90, historically high, when it gets resolved, right? When that bungee, that 90 turns into 60, the silver price goes up. All right? Now, let's just visualize that. Boy, we got a lot of visuals today. Hold on here. Here it is. This long-term chart since 1975 of the silver to gold ratio. This is where we are today, right? Right at about 87 on this chart, 90. This dark area is historically where we've been. This is 60. That's about the average, okay? Again, if gold continues up and this ratio gets just back to long-term average areas, guys, we could have massive price increases in silver alone. It's very interesting developments that we have going on in the gold market, but how they relate to silver as well. Everybody's saying, right, silver's the most undervalued asset, and I got more big news about silver that I want to share with you as well. But if you want to get your hands on some silver, gold, or platinum, if you're going to go online and shop around, do yourself a favor, throw Pimbex into the mix. I just got a shipment yesterday from Pimbex. It was packed like Fort Knox. It was a box that was nicely taped. Inside that box was another box, which was nicely taped. And inside that box was a bunch of packing material and a nice heavy-duty rubber plastic bag with another plastic bag inside of it that had the 2023 Britannias that I had ordered. I've always been very happy with Pimbex. Okay, you get the best price, the best service, and a great selection. I wanted to get some of the 2023 Britannias that had King Charles on them because nobody wants them, and I think they're going to be valuable someday. Look, I'm not telling you what to do. I'm just recommending you do yourself a favor. It's what I did because one of you recommended to me that I check out Pimbex. Throw them into the mix. Compare the prices. Read the reviews. I've received overwhelmingly positive feedback about Pimbex. Thank you, Pimbex, for sponsoring Ron's Basement. Ron McAdams, thank you for that super chat, my friend. Super generous. Super chats are super appreciated, never super expected, but they do go a long way to help support the channel. So thank you in advance for super chats, and thank you, Ron, for that super chat. Let me have a sip of coffee because we got a lot more to talk about, boys and girls. Silver stackers. Okay. Wow, it's just getting crazy. Okay, COMEX. Let's talk about the inventory. We know the silver inventory at the COMEX, at the LBMA. I don't know what, the last 3 years, almost a 500 million ounces have been drained, right? What about gold? This is very interesting. This comes from Ditch the Deep State. It was on the Silver Desian Club. This is about gold, the amount of gold in the vault, the registered gold. That's the gold that the COMEX has, the LBMA have, that they use to back all the paper contracts. Another blowout day on the February gold contract. Plus, the COMEX gold bleed, it's bleeding, continues. 4.2 tons departing HSBC's vault. Year to date, sit down for this one. COMEX registered gold is now down 21%, 2.12 million ounces, and COMEX total is down 11%. All right. Wow, the total amount. The registered, though, the registered's the important number. That's the gold that can be used to settle the contracts for delivery. People are taking delivery of the gold. The Chinese want the gold. The rich people want the gold. People are losing faith in the system. They want the gold. The central banks want the gold. People are taking the gold. 20% of the registered inventory at the COMEX is gone. Poof. Okay? We need to keep a close eye on this. We know this trend going on around the world that people are moving to gold. And again, it's going to bleed through into the silver market. There's absolutely no doubt about it. But the hard data shows us, again, year-to-date, COMEX registered gold down 21%. Whew. Let's move on. Oh, one more interesting thing, right, that we need to touch on that everybody is talking about now, but we talked about earlier in the week. Stanley Druckenmiller sold tech stocks and moved into gold mining stocks. Stan Druckenmiller's not a gold bug. Stan Druckenmiller's just what you might refer to as a very, very smart investor. Okay, a billionaire, one of the smartest guys out there. When he sold traditional tech, they call it now, Amazon, whatever, Facebook, Microsoft, and it started moving money into the gold mining sector. Very interesting. Let's talk about debt. Because when the debt bubbles pop, guys, and we've got a debt bubble, people are going to be rushing for silver and gold. When people realize that governments, businesses, corporate bankruptcies, government, sovereign debt crisis, and households can't pay their bills, they're going to be looking for somewhere to go. And who are they going to call? They're not going to call Ghostbusters. No. They're going to call Pimbex. They're going to call their local coin shop. They're going to be looking for silver and gold. And we know what happened just 1 year ago, right now, when we had a little banking crisis, right? People went nuts. And you couldn't get silver, and there were 6 weeks waiting periods if you bought it online. We know that happened. You know what? I think I have this chart. I don't know why. Yeah, here, right? Let's remember. There's a chart showing the level of bank failures. That was the great financial crisis. See how many banks, guess what? Last year, outdid it. And guess what? The rescue program, the bailout program, we'll call it what it is, right? We're not going to sugarcoat it. That the Fed and the Treasury came up with, the bank term funding program that stopped this from getting worse. Well, they're taking that away from the banks on March 11th. So it's going to be very interesting now as we head into the summer to see how that all plays out. But critical to remember, right? I've heard this said many different ways now. When this debt bubble, right, when people get spooked and the debt market is multiple times bigger than the stock market throughout the world, this is a worldwide situation. When people get spooked and they start to think, I might not get paid back on my debt, right? They're going to go to silver and gold. And let's just take a quick look at this from our friend Sean, right? That shows debt to GDP of the developed nations. I mean, we've got debt to GDP over 100% in the United, here, let's go through the list. What do you say? The United Kingdom, Belgium, Canada, Spain, Portugal, France, the United States of America, 123% debt to GDP. The G7 average of the G7, the big Western countries, 128%. Italy, 144%. Singapore, 168%. Greece, 168%. And Japan takes the cake, number one, with a debt to GDP ratio of 255%. That's the line at the top of that page. Do we have a debt problem? Yes. When the debt problem comes to fruition, are people going to run to silver and gold? Yes. Are people really going to run to silver? I think even more so. Yes, yes, yes. We had a great demonstration of that, like we just talked about last year during the banking crisis. Okay? Let's talk about some bad news. briefly. We'll talk about two pieces of bad news. The gold mining stocks are so far down. We are at historic lows. Okay, the ratio that compares gold mining stocks to gold, okay, is at 0.1. It's called the Huey to gold index. The only negative we could see that's got to be resolved one way or the other. If you take a look at this, that's a long-term chart of it. We are right here where the star is at 0.1. As you can see, that is historically low. One of two things has got to happen. Either gold mining stocks have got to go up, okay, that will resolve that ratio, or the price of gold could go down. But do you feel like gold can go down? Do you feel like we're going to go below 2,000 on gold again and stay there? Let me know what you think. I want to get an idea, okay? I tell you what, if you think that we're going to be above 2,000 from now on, that maybe we'll never see a gold price starting with a 1 until we get to 10,000, type 2,000. Oh, no, you know what? Type above. I'm typing above. I think we're up above. What do you think? I want to see what you think. Do you think? Good morning, Jim McDonough. Good to see you, my friend. Do you think we're above 2,000 now for good? Or do you think we'll be below? Do you think we'll be below? We'll spend some time below. If you do, type below in the chat so we can get Snakebite above, Wes above, Shannon above, mostly aboves. Morning, everyone. Donald Robinson says above. All right, above, then go back up. Okay, yep, Annie Oakley. Unfortunately, yes. Hey, Cliff, good to see you, my friend. Dr. Jekyll above. All right. Let's talk about more bad news. Let's talk about this debt. This is some stunning information. Crazy. Peter St. Onge said, put this together, but it comes from the New York Federal Reserve. Recent data says American households, is this you? American household debt rate went up by $212 billion in the fourth quarter of last year to a record 17. These are households. Remember, we have government debt, corporate debt, and household debt. Okay, record household debt, $17.5 trillion, or about $140,000 of debt on average per household in the United States. That's up by over $3 trillion since the pandemic. Okay, federal debt. This is crazy. I didn't realize this, and check me on this if I'm wrong. But federal debt, our government debt, is up $10 trillion in the last 4 years. Is that crazy or what? We think 34 trillion is crazy. We added 10 trillion in just the last 4 years. It's unbelievable. We have total mortgage debt now is $12 trillion. And we have $1.6 trillion in debt each on car loans and student loans. All right, 1.1 trillion in credit card debt. That's the highest ever. And remember, those are super high rates. If you're carrying a credit card balance, you're probably paying 25% interest. It's insane. $6,000 per household. But the default rates, this is the scary part. The default rates are starting to skyrocket. Car loans are the first place where we're seeing default rates, cars getting repossessed, starting to go up. People that bought these overpriced cars during the pandemic can't afford a $1,000 car payment while at the same time trying to put food on the table for their family, are getting their cars repossessed. What's that? Oh, Susie just yelled at me. We got 100 thumbs up. Hey, thank you guys for the thumbs up. I'm going to ring the bell. Hopefully you could hear that 100 times as a sign of our love for each other. I feel corny saying love, but you know what? It's okay for us to love each other, be there for each other, right? We're basement dwellers. We get together. We love to talk about this stuff, gold and silver, and it's a mess out there. Credit card delinquencies are on the rise. And what's interesting is that the younger people, the younger generation, right? They're the ones who have the highest default. The people are engaging. Have you heard of this? It's called doom spending. Like, I don't care anymore. I give up. I'm just going to go spend all my money. I'm going to go rack up my credit card debts. Like doom spending. Maybe that explains when I was at the Great Wolf Lodge with Susie and the girls earlier in the week, their place was sold out. Maybe those people were doom spending. Some of them looked like they were in doom world, that's for sure. But nonetheless, what are people doing? What happened to this idea that you only borrowed money if you needed to, right? Certainly our government forgot about that. And what about, and I'm just going to rant for 1 minute, right? What about this idea that our government, how about our government thinks about and starts talking about and taking actions to actually pay the national debt off, right? Don't you borrow money with the idea that you're going to pay it off instead of this, well, we'll just borrow all we want. We'll borrow it till what? Why not? Why not? Why are we not hearing about this foreign concept that you actually pay your debts off? You know, I don't know. What do you think about that? Do you think the United States should be focused on paying their debts off? I do. You know, if you do, type yes. I'll type yes. I mean, what the heck? If I ever borrow money from you or from anybody, a bank, anyone, like the first thing on my mind is, how am I going to pay this back? I hate debt. You know that. But nonetheless, what's going on? There's this culture that's developing now. Like, you don't have to really pay it back. Hey, maybe, take out some student loans. Maybe someday the president will just magically forgive them. And don't forget, and this makes me very angry, those student loans that are being forgiven, they're not being forgiven. They're just being transferred from the person that borrowed the money to the American taxpayer. You and me are picking up the tab, okay? There's no other way around that. There's no magic voodoo like, oh, we'll just forget about it. No. You and I are the ones picking up the tab for that. So let's talk about silver. Because I want to get the Tonka truck up again, but I won't. Silver is very interesting. Silver is coiling for a big, big move. Okay, I was looking at the cup and handle. There's a cup and handle on the silver chart that goes back decades and decades. So, and it starts at 50, hits 50 again, and now we're starting on our way up. We got a lot more to go, but when we get above 50 again in silver, it's going to be off to the races. Andrew McGuire was saying there's a very interesting situation developing in the silver market. And the only place I'm hearing this talked about is with Andrew McGuire, maybe because he has such an in-depth knowledge of the mechanics of how the markets work, in particular the gold and silver markets. But it's super interesting to realize there's a bigger market out there than just me and you at our local coin shop or buying bullion online. We tend to focus in on that, right? The bigger part of the market is the wholesale market. And there are some crazy developments apparently going on in the wholesale silver market. Demand in the wholesale market is through the roof. It's been building over the last few weeks and is now at almost what they're calling unprecedented levels. The manipulator traders, this is the interesting part, haven't caught on to it yet. But apparently it has something to do with India basically saying, we'll buy all the wholesale silver that you can sell us at this current spot price. And people are scrambling in the wholesale markets to find the silver to fill these orders, right? We don't see that now on a retail, local coin shop level, right? With Britannias, like I got from Pimbex the other day, or if you run to your local coin shop today and buy some American Silver Eagles or whatever, there's a surplus right now. Kind of the opposite has happened in the retail market, but apparently on the wholesale market. And guys, I would argue, like to us, the retail market's important, right? But in the end, when it comes to the big picture for silver, the wholesale market is actually much, much more important. That's where massive demand growth is occurring right now. Now, on top of that, just so we can feel warm and fuzzy, which is always a top priority for us when we come to the basement, we are sitting around the campfire at Silver and Gold Camp right now, right? Having our conversation. On top of this crazy wholesale demand, think about what'll happen. I mean, think about what happened just a year ago. Last time I'll bring it up today, right? When we had a little crisis in the retail demand for silver exploded, right? If we've got a wholesale demand explosion and we get, right now, it's horrible. On a scale of 1 to 10, right? The people I'm talking to on the retail investment side of silver are saying we're like a 2, okay? It's not good. But if we go from just 2 to 5 or 2 to 4, right? Improve a little bit in terms of sentiment and interest in the retail silver investment sector, and couple that with what is already incredible, some people are saying unprecedented demand at the wholesale level, while at the same time, we know that the inventories at the COMEX and the LBMA have pretty much been depleted, right? I mean, they're, what, the last I checked, the COMEX had like 42 million ounces of silver in their registered category. If all those things come together, that's when we could see the compression of that silver to gold ratio from 90 to 50, right? And if we get $2,500 gold, right, and we get a $50 silver to gold ratio, if my math is correct, we get $50 silver, right? Yeah. 50 times 50 is 2,500. So let's keep the big picture in mind here while we look at there's multiple dynamics, right? We're trying to put together an impossible puzzle, but we're looking at all the hints, all the ideas that are being given to us, right? Crazy wholesale demand for silver, number one, right? Horrible demand from retail investors, all right? But it can't get much worse, okay? It can, but most likely retail demand for silver will get better, especially as we're heading into this year with all this craziness that's unfolding around us in the United States domestically, but in the world as a whole as well. Okay. And then you continue to look at the fact that there's fewer ounces of silver being pulled out of the ground by the mining companies. Yes, I talked to the CEOs. Yes, nobody's investing any money into silver mining. Very little. I mean, somebody who wins the Powerball drawing could basically buy the whole silver mining sector. There's so little money going into it. As we look at all these pictures moving together, these factors moving together, right? We try to develop a thesis based upon that. It's not perfect. I can't predict the future. You can't predict the future. But when we look at all the pieces moving together, there's a lot of factors that could become very supportive for much higher silver prices, okay? Much, much higher silver prices. Because, I won't play with it for a week, but if the gold price goes up to 2,500, right? And the silver to gold, this elastic band, which is the silver to gold ratio, right, keeps stretched at 90, and the silver to gold ratio then starts to compress up to 50, right? That's how we get, right? Let's turn them on. That's how we get $50 silver. I promise I won't play with my toy trucks anymore. Till the next live stream. Okay. European refiners are sold out of silver supply. Again, this is according to Andrew McGuire. You can watch him on Live from the Vault. The guy knows more about the markets than anybody, in my opinion. Well, Vince Lanci gives him a run for his money, that's for sure. And maybe Chris Marcus and a couple of other people. Anyway, Indian demand for silver at spot prices is massive. Let's not forget, what was it, 2022? When the country of India imported like 320 million ounces of silver, like 39% of the entire year's mining production of silver. So this can happen, guys, okay? What's going to happen? This is from Janice. Janice sent me an email, and she said, Ron, she sounded concerned. She was worried. She said, what's going to happen when silver hits $50? In my coin shop, Are we going to be able to cash out? Well, don't cash out everything. Now, I'm not giving financial advice. I'm going to answer this question. She's worried about the coin shops closing down and not buying silver at $50. We're going to get to that. But first, we want to say thank you, channel sponsor Fortuna Silver. They're a silver and gold miner with 5 operating mines. I believe they have one of the stronger balance sheets in the industry. They've positioned themselves to be able to weather any precious metals market, but really harvest big gains when we have big gains in the price of silver and gold. You can learn more about them at fortunasilver.com. First Mining Gold, Canadian gold developer, 2, not 1, 2. 5 million ounce development projects in Canada. And they have either ownership or an interest in 4 other projects in Canada. But those 2 projects, Springpole in Ontario, Du Parquet in Quebec, each have at least 5 million ounces of gold in the ground. They're moving through the exciting development phase right now. So they'll be catalyst rich over the next couple of years. Look, the reality is the big mining companies have not invested into their pipeline, right? The number of reserves that the big gold mining companies, and it's true for silver mining companies too, their reserves have gone down. There's going to be a point where these big companies aren't going to be able to produce as much silver and gold. It's a depleting business. That will be good for the silver price and the gold price, right? But it'll also be good for companies like First Mining Gold that have projects that are moving through the permitting phase that could be ready to go and fill that void that these big mining companies will need to fill. But again, that's one of the critical key components that we like to talk about in regards to really the silver price. We focus on that. I mean, these mining companies, their pipelines are running dry. There just isn't a lot of silver out there. The fundamentals are in place. Thank you, Craig Edmonds. Thank you for that super chat, my friend. Thank you, Craig. The fundamentals are definitely in place. Now, Janice is worried that if silver goes to $50 per ounce, she's not going to be able to sell any of her silver. First thing I would say is don't sell all your silver. If you're going to sell, you do whatever you want, but I would say maybe sell a third, sell a half, right? Because if you do an all or nothing type thing, you're really taking a big risk, right? If you sell half and hope the price continues upward, so the half you kept continues to go up in value, right? Which a lot of us silver stackers believe it will, but she's concerned that you won't even be able to get rid of your silver if the price gets to $50. I would argue, and I don't mean this in an argumentative way, but I would argue that yes, you will, because if and when silver gets to $50, it's going to be because market forces broke the paper market, broke the electronic market, the COMEX and the LBMA. The demand for silver overwhelmed the market. So that same demand that drove the price to 50, to 40, to 35, to 60, the only thing that's going to drive the price is demand. So I would argue that you'll easily still be able to sell your silver at that level. That they'll be, if silver gets to $50, it'd be like when gold blasted off a few times in the past and you start getting those flyers in the mail. We'll buy your junk gold. You'll see flyers in your mailbox telling you, thank you, Neil. Hey, thank you, Neil, for the super chat. Super chat, Neil. You'll get flyers in your mailbox saying, bring us grandma's silverware. We want your silver. They will be clamoring to buy silver. So it might actually, I understand the concern, and I don't have a crystal ball, right? But the only thing that's going to get us to $50 silver is going to be the demand. And that demand is still going to be there, at $50 silver, right? It may go to $60 silver. It may, who knows, right? We've talked about this, how high it can go. So, the other thing to think about also, like we talked about earlier, this wholesale demand for silver. Now, if the price goes to 50 and the wholesalers are scrambling, they'll be buying the silver at a big premium and melting it down, right? They'll be buying all your silver rounds, all your 10-ounce bars, and melting it down to make it into 5,000-ounce bars to satisfy the wholesale demand picture, okay? So That's what I see coming, guys. We've got a lot to be happy about with this gold price. 14 weeks above $2,000, right? I think we closed the spot price on Friday, what, 2030, 2040? Remember, right? Gold leads silver. I'm not going to pull up the Tonka truck for you again, but we need to remember that, okay? And that there are so many great accomplishments that have been made with the gold price, right? Not just the 14 weeks, but the November, the first monthly close above $2,000. And the fact that the cup and handle pattern, I'm not going to say it's broken out yet, but it sure looks like it's itching to break out. And if we get, look, who was it just the other day? Some big name, was it Citi? I think it was Citi, said that we could see $3,000 gold within the next 18 months. Where do you think silver's going to be if we get to $3,000 gold? Right? Because you know what? If we get to $3,000 gold, people are going to be clamoring for gold, but then they're going to look at silver and be like, maybe silver initially only rallies to $30 or $35 per ounce, but they're going to look and say, I can buy 100 ounces of silver for the same price I can buy gold. Silver is going to catch up. It's going to be the elastic band contracting, and it can overperform. And maybe that's when, like Janice said, right? Maybe that is when you want to consider getting rid of some of your silver. If you're a person, I buy it as a generational investment. Okay, I buy whatever I ever used to put silver. I get it. I take it off site, store it off site, and save it as a generational investment. My kids, my grandkids, I'll tell you a story. Yesterday was my daughter's birthday. They turned 12. And Sassy Silver gave them a nice Kookaburra coins. Very nice. Thank you, Sassy Silver, for doing that. They love them. But I also got this little shipment in the mail from Pimbex, the King Charles Britannias that I bought. And I felt guilty. I was feeling guilty. I'm like, it's my daughter's birthday, and I'm getting this package in the mail. And I thought, you know what? This is actually a gift for them that they don't realize, because I envision this as something that they're going to get someday. And I know that those silver Britannia coins with King Charles on them, because they'll be very rare, and that's just a maybe, just the silver alone is going to be valuable. I thought I really am giving them a big gift today, a big gift, but they don't necessarily realize it, right? They're 12 years old. To them, a big gift is a new case for their iPhone or, whatever. You know how kids are. So anyhow, thank you for being here, guys. Thank you for your support, being part of the basement. You guys are always so awesome. We couldn't ask for more. Please give this a thumbs up, subscribe to the channel, and I'll see you soon. Thank you.